As I mentioned before, this is one of the few HR oil and gas conferences around the world that we almost always actively participate in, and part of it is because of great presenters such as Mel and Ben that you've seen so far. Hopefully you're not too disappointed by my presentation deck, but I did want to share with you some insights that we have from Rigzones, from a couple of studies that we've done recently amongst our global audience of oil and gas industry job seekers as well as hiring managers. I'll also share with you today, even though we're all mostly focused in human resources, some industry analysis from a senior market analyst that we have on our data team, Delia Morris, who looks at constantly kind of the short-term and long-term trends in the oil and gas sector, which I think you'll find interesting given the current times. First, just a quick overview of Rigzone for those of you who may not be familiar with us. We are the global leader in news, jobs, and data for the oil and gas industry, and quite simply, our passion is to empower the people who power the world in our sector. The centerpiece of our brand is Rigzone.com, which has over 3.5 million members worldwide, 1.9 million CVs, just under 2 million right now, and 2.5 million monthly website visits per month. Our CV database on the recruiting portal grows by about 30,000 resumes per month, so it's a really active segmentation within our membership group. When you look at our members across the world, it's surprisingly diverse. We have strong representation really from all the major regions of the world, particularly in the oil and gas centers that we operate out of, starting with the Americas, which is really our birthplace. We're headquartered here, so it remains to be our strongest segment, followed by Europe and Africa, Middle East, as well as Asia Pacific, which includes Australia. Our large global presence really puts us in a very unique position, and really kind of the point, I think, and what makes us very interesting is that we have access to information and data that is, in some cases, very difficult to collect. So really, in the past 2 years, we have strategically partnered with some key folks to work and collaborate on a lot of analysis of what's happening in our industry. And I'll kind of allude to some of those studies that we've done. But we've partnered recently with companies like Mercer Consulting, KPMG, the Wright Group out of Australia, and most recently, Schlumberger Business Consulting, which was recently acquired by Accenture. So I think you'll find some of the studies that we've produced to be quite insightful. Let me start with some good news. Our global oil and gas industry, as you probably well know, supports almost 10 million workers worldwide. So that's a massive workforce. The people that work in our sector obviously power the world, and it's something that continues to be very important given the geopolitical nature of what's happening around the world. But what's also important to keep in mind, despite some of the downturn today, is that recently IHS did a study, and they looked at the worker demand for oil and gas positions, and they really are projecting that in the next 5 years that we're going to need an additional 3 million workers to work in this space, both skilled labor as well as technical positions. So, that's a pretty important projection, even if they're, even if they're slightly off margin. That's a huge growth in our segmentation that we know we'll need to adapt to. Another good bit of information really comes from one of those studies that I mentioned, the Wright Group out of Australia. We partnered with them this past January on an engagement study with oil and gas workers around the world. And one of the really interesting pieces that bubbled up out of this was the industry loyalty that we have in oil and gas, which is very unique to our segment. 92% of those in that study said that they felt pride in working in this industry. They're doing things that are really meaningful, that are powering the world, solving really complex problems. And I think that's unique. That's uniquely high within our sector versus other industries. What's interesting to note beyond that is the loyalty that these same workers have for their own companies is less. It's closer to about 70%. It's an interesting anomaly, but I think that pride is something that we need to kind of keep in mind, because it is something that we can use as leverage in advancing our sector forward. Now for some bad news, 200,000. I mean, that's really kind of the stark reality of where we live today. This is the estimated number of oil and gas jobs that have been lost since the crude oil collapse. This was published by Swift Resources, and we think at Rigzone that that's a fairly accurate number. So that's pretty significant in what we'd consider a 12-month time frame. This is stuff that we see in the news all the time. I'm sure it's probably not the very end of it, unfortunately. And I do think, and our analysts think, there'll be a lot of mergers and acquisitions that you'll continue to see. And that comes along with that are unfortunately some additional downturns. But I think it still underscores the significance, given the projected future growth and independence of fossil fuels, how difficult all our jobs are in finding talent. What doesn't go away is really this dramatic shortage of folks. I think what's more complex now, as I'll talk a little bit more about, is the complexity in the different demographics that we now have within our workplace. Let me talk a little bit about some of our industry trends. Let me talk a little bit about our expectations as well. We talked about internally what we felt as industry pride being very high. When you survey those outside of our industry, the perception of our industry is quite low, and we probably intrinsically kind of knew that. Things with oil spills, those are really difficult things for us to address in the public eye, but in terms of a level of trust that this study did, our industry is really on the lower half of those, just behind the pharmaceutical industry and slightly ahead of chemicals. So, if the gold standard is really the tech sector with consumer electronics being at close to an 80% trust level, we still have a lot of work to do in that segmentation. I mentioned our senior market analyst, Delia Morris. She produced some really interesting publications. Our data services team has been quite busy with a couple of new product releases this year, including some forecasting tools that we have. I didn't want to get too technical into what's happening, but I thought it's important to kind of frame where we are and where a lot of analysts see our industry going. The first slide really talks just simply about global supply and demand. It's really at the crux of some of the issues that we're facing today. The slide here displays the EIA's October short-term outlook for monthly crude oil or crude supply versus demand, which extends out to the end of 2016. I don't know if I have a blinker, but you can see starting within, I believe, September of 2014 to October now, there's a big gap. You can see where the red and blue trends kind of merge away from each other. That's really that's kind of the issue that we're facing here today, is this gap represents, somewhat estimate, between 1.5 million barrels per day to close to 3 million barrels per day. And it's because the U.S. continues to produce at a fairly high level, really driven by the shale revolution that we experienced, which was really important from a technology standpoint. But in regions such as Russia, which just published their highest production rate in history last month, and OPEC countries continue to produce, it's really kind of increasing the marketplace. And the demand, although it's growing, isn't growing at the pace that the supply is coming in. So the International Energy Agency in this October report really estimated this global demand. It'll grow at a rate about 1.8 million barrels per day, but will slow down in 2016 to 1.2 million barrels per day. So there's a lot of moving parts in this analysis. It's very complex, which is why you typically do not see a lot of people really standing firm on what their projection will be 3 to 5 years out. But I think just about every analyst right now is saying that we will, kind of see the status quo of this downturn really not changing, probably towards the end of 2016, and some saying 2 to 3 years beyond that. The oil price kind of index is an interesting one to look at. This, simply charts the historic WTI and Brent oil prices from January of 2014 and projecting it out to 2018 or 16. Consensus is that this downturn is going to stay lower for a longer period of time, which is why you see kind of the projections really not dramatically fluctuating. I think kind of the important barriers to keep in mind is maybe the $55 to $60 per price area. The reaction from oil companies, as you would suspect, has really been of general cost containment, squeezing the supply chain. Many of us know what that feels like. If you are on the service side of companies, this has had a disproportionate impact on their business because they're really the first ones to feel it. So lower CapEx spend, project deferrals, those are kind of the new normalcies that we're seeing in our industry. And many are projecting that, projects that used to be sanctioned at $70 per barrel probably won't be green lighted until, it's about $55, maybe $60 per barrel. So I think it's just a very cautious time for most of us in the industry. The commodity cycle, we've seen significant drops before. Obviously, the longest one being in the mid-80s. This is a study from the World Bank that really compares the supply-demand that you saw earlier from the early 80s till now, also with the oil price that's superimposed there. I think what's really important to keep in mind is that what history has kind of shown us is that our sector kind of auto-corrects itself. We've seen fairly quick, dramatic fluctuations, but the price movements that we've seen in the last few months really are more of a reflection on the volatility and other factors. They're not really related to the underlying fundamental aspects of what's happening. This is why it's so difficult to project what's going to happen. So, as I mentioned, lower for longer is kind of where our analysts are seeing this projection. 2016 will be a year where it's very cautious in terms of spending and CapEx. And hopefully, if the oil price can get to the $55 and hopefully $60 level, I think that's where you'll see some more project delivery and healthy growth. The last slide I'll talk about is an interesting study that came from BP. This is BP's energy outlook to 2035. I wanted to just frame kind of the perspective, at least from one owner-operator, of how they see the world's consumption of energy. And 2015 is on the left. Their projection of 2035 is on the right. Oil, gas, coal, nuclear, renewables. You can see that it's not a dramatic change that they see, in that time frame. And BP's perspective is that the energy mix, to change that, it takes generations to really change that demand. And fossil fuels, they really believe will be fairly stable for the next 20 years. If anything, they see gas increasing slightly over that period and oil only dropping moderately within that time frame. So really, the dependence of the world on fossil fuels, most folks don't see that changing very dramatically, which is why the talent issues, even though we're in a downturn, remain to be a really important problem set for us to think about in terms of long-term planning. All right, so now that I set the stage, we'll talk a little bit about some of those studies that we've recently done. Our first really is focused on the job seeker. These are candidates looking for job opportunities. We sent out a survey last September through October, a little under 500 total respondents from around the world. You can kind of see the representation and geographically where they came from, but also the age and experience mix within there. So this is not necessarily representative of our industry as a whole in terms of age especially. That's not kind of the ratio of baby boomers to Gen X to millennials, but I think it's a strong representation from a survey standpoint. And years in work, you could also see a very balanced kind of experience level of those folks that participated. One of the things we obviously asked were what positions as a job seeker were you looking for, either to work in or to get into in terms of work. So you see a representative mix in terms of the types of positions. Top are drilling, rig personnel, management and support, followed by maintenance inspection and HSE. You'll see further down, it's also a mix of skilled labor as well as very technical positions such as the geosciences and petroleum engineering. So this is purely from the candidate side. You'll actually see a slide coming up where we ask hiring managers of what positions are you actively recruiting for right now. So you'll see some similarities, but obviously they're not going to be aligned perfectly in terms of what's happening on a global scale. So interestingly, when we asked about the employment status and kind of whether they're actively searching or not, roughly half of the folks in this survey were unemployed. I mean, you would expect that, right? These are folks that are actively on a job board looking for things. About 52% were currently unemployed. But almost 100%, 97% said that they're all seeking a new job. This talks a little bit about the anxiety of what's happening. There's so much uncertainty. Candidates are really active in what's happening. And we see that in our web traffic, right? I mean, we're at all-time highs. A lot of it because of the news and the publications from my editors. There's a lot of information of what's happening. People want to seek that information out. But also on the job site, there's a lot of activities, much higher than you would think with a small number of, relatively small number of job vacancies. There's still approximately about 3,000, 4,000 jobs posted on the site, but that's small comparative to past periods. 84%, it's interesting to note, were willing to relocate. That's a fairly high number. We typically wouldn't see that number from candidates looking at job opportunities. I think the most troubling for me is the lower right-hand corner, the number of people that would consider leaving oil and gas. This is problematic. We typically would see a much higher level that would not consider leaving oil and gas, typically in the 80s. In this survey, it was 66%. So that tells me there's a fairly significant part of our sector that's actively contemplating moving into different line of work. We've talked about millennials. This is probably an important topic at most of your organizations. This is becoming really front and center for most of us, primarily because they now represent the largest segment of our workforce. This just happened, actually. This publication came out in September, I believe. And so understanding the millennials is going to prove to be really important for us in this segment of our work because they represent the largest segment of our workforce. They're quite different from how they think and approach and what motivates them, as you know, from baby boomers, obviously, but also from Gen X. And this is an area that not too many people know a great deal about, and it's something that we need to really be very cautious of and be understanding of in seeking information out. So we asked, what motivates them? This is one of the survey questions that came through. What's important to them in a new company, right? Much of it comes down to organizational culture, aspects of the company that appeal to people's sense of belonging and the motivation to master their practice. These are very much slanted towards the millennial group force, right? It only represented 33% of this survey set, yet these things are still trickling up. So it means it's beyond the millennial group. But the cultural aspect of it, I think, is hugely important. When asked about traits that candidates value in their leaders, they ranked trustworthiness and honesty as their number one, their top item. Clearly, the desire to work for leaders who help create that culture where workers thrive is of high value. These are really dynamic shifts from what we may have seen 10 years ago. When asked to narrow down the top factors for them that's important when thinking about job selection, competitive salary, of course, remains high in the ranking, but next were opportunity to work globally and to do meaningful work. Again, footprints of the millennial segmentation. These are very important things that, alongside salary and compensation are things that we need to keep in mind that our industry as a whole needs to proactively think about as we continue to attract the next generation of workers. How do candidates search for jobs? We wanted to know, how they find jobs, what's most useful to them. Overwhelmingly, they cited industry-specific job boards, 46%, employer websites, 17%, primarily because that's the concentration of the type of work that they are looking for. And so the reliance on generalist type of things are kind of falling the wayside. They also, the use of the industry friends and networking continues to be really important. We'll talk more about social media and search engines, particularly mobile searches, but these are all things that are important and constantly changing within that workforce. So it's critical to keep in mind that the role of mobile devices are playing in the candidate job search. This has been a really dramatic change for all of us, probably in the last 5 years. From a human resource standpoint, it's really important to understand what's happening from a trends perspective. So Google, every year does a lot of industry-specific types of study. This analysis is specific to our industry, oil and gas. And what Google is telling us is that today, nearly 50% of all searches on the internet are now done from mobile devices. That means not only are they looking for jobs, they're applying for jobs today on mobile devices. You can see the difference between 2013 and 2014. It's grown, it's shifted very quickly in 1 year. So this is something that continues to really drive how we look at the application process. So, that begs to ask the question, what is your company's mobile strategy? If you don't have one on candidate acquisition, this is certainly the time that we need to be looking at it because of that increased percentage. As I mentioned, 46% of millennials have already applied for a job from a mobile device, and that'll only continue to increase. I'll switch finally to the recruiter survey. This is a separate study that we did to hiring managers around the world. Very different set of questions. Again, same time period, just around 300 hiring managers responded throughout different regions. Various company sizes, as you can see in the lower right, but a very strong sample set. Back to kind of the first slides that I showed you from the candidate perspective, what's the most in demand from these hiring managers currently today? So this is interesting to see. Engineering and science, management support, right? Those are the most in demand. Those are the hardest to fulfill, right? The technical subsets. It's interesting to compare that to what job seekers were looking for. Actually, management support was high in that ranking. I think it was number 2. But engineering and science is kind of really the key fundamental aspect of kind of the bread and butter of the things that are still very difficult to recruit and remain high. Maintenance inspection, very similar to candidate side, oil field services, to HSE. You could see all the way down to the skilled trades and geosciences again. Interesting to kind of just rank them to see what's happening on a global scale. So we see indicators, for the demand for petroleum engineers, for example, continuing to grow. This is a statistic produced by the U.S. Bureau of Labor. They see 26% rate of growth for petroleum engineers through 2022. That's the fastest average growth for any occupation in the U.S. So our dependence purely, hasn't changed. In fact, it's continuing to accelerate. And understanding really the dynamics of the millennial workforce is going to really kind of play into how difficult this continues to be from STEM perspective. So you can see, without really going to the details of the study, that really the balance of kind of hiring managers versus candidates has shifted quite a bit. It's really the hiring managers are kind of in the driving seat, if you will, because there are so many more qualified folks currently that they really have the ability, the luxury, if you will, to be very selective in what they're looking for. So it's actually a very good time if your company is busy with projects to be hiring, because there are some very talented folks available. 81% of the hiring managers said, they've seen an increase in the availability of highly qualified folks, which is good. 70% hiring managers surveyed said that candidates, in many cases, were willing to accept less compensation than they were previously, even compared to last quarter. And things like sign-on bonuses are very rare in an environment like this. Only 8% were offering sign-on bonuses. When you look at kind of the Western demographics, what you see today is that half of really the global workforce is eligible to retire this year, which is kind of a scary number. Realistically, 10% of that group will probably retire in the next 12 months. We see this kind of ongoing slow wave of baby boomers retiring over a period of 15 years. So it's not a one dramatic drop-off. But really the emphasis from a human resource standpoint is that knowledge transfer. How do we transfer that knowledge of those folks that are making their exit today to the young folks that are really stepping into leadership roles? It's been much abbreviated, so that continues to be probably one of the biggest challenges for us. When it comes to digital technology, we see recruiters using digital channels more and more to promote jobs. Recruiters are using social media and job boards to attract the next generation of workers, but also beyond that millennial generation, everyone is really becoming very accustomed to utilizing it. It's kind of being the new norm, right? 69% of the hiring managers that we surveyed said that they all post jobs on job boards. That has been effective, particularly in attracting millennials. 74% are using social media to some perspective when it comes to recruitment, and you'll see a little bit more about social media. But that's a really big increase from just 2 years ago when we started these surveys. Social media really is kind of seen as a reconnaissance tool, right? You can use it to recruit. I think we're, as an industry, beginning to learn how to use social media as a recruiting tool, but really it's probably more being used as a reconnaissance tool. Sampling the information around a candidate that you've narrowed it down to, what does their social media footprint look like, right? So, good recruiters, once they have a candidate and a CV and does interviews, they really look at beyond to that. What does their LinkedIn profile look like? What does their Facebook footprint look like? Twitter pages, where are their areas of interest? Where do they participate in terms of blogging or producing content or publication? These are all kind of important things to understand as a recruiter. Almost 75% use it in that recruiting process to examine those candidates. And most of the folks that we sampled, they said that it would be a very effective tool if it existed that allowed you to kind of aggregate all of that social media information so you can compare it very quickly as opposed to going on 7 different sites. So what are the key takeaways? I try to boil it down really into 5 kind of key areas of focus. One is, high value talent is available. Now is the time really to acquire that high talent pool. If you have open positions that offer the challenging kind of opportunities that folks are looking for. 2, focus on culture. Building the right culture will continue to be hugely important, I believe, in our segment. Money isn't the only thing that matters anymore. It's really about people wanting to make a difference. 3, focus on the millennial set. They have a very unique mindset and values. We need to really understand what motivates them. 4, growing the employee loyalty. We talked about industry kind of pride, but we need to now focus on employee loyalty and what that means. I found Ben's kind of talk earlier today to be really fascinating. It really changes the paradigm in how all companies, not just oil and gas companies, really have to kind of change how we think about engagement and how people perceive loyalty within the workplace. And lastly, digital is critical. The role of mobile devices and social media will only continue to be important. So we need to embrace that change and really understand it. So if you have any questions on this study or sets of studies or publications like we recently did with KPMG, feel free to email me. I can't remember if we're providing copies of presentations to everyone from today, but if you email me, I'll certainly give you a presentation or segments of it that you could use for your internal meetings and presentations. But thank you very much. I think we're still on time, on track with time. Certainly have time for a few questions if you have around the room. Otherwise, I'll go through kind of the next presentation and talk about the lunch break. But are there any questions out there, first of all? Surely someone does. Yes, sir. That's a great question. Which social media channels are candidates using the most? So we haven't done a full study on it. I could give you some insights. Rigzone is a part of DHI Corporation, which is basically 11 vertical job boards. What's really interesting is one of our sister companies, Dice.com, which was really one of the leaders in this sector. They're focused on IT. They have a really good understanding of the segmentation. So it's quite different when you talk about different segments. So in IT space, the social media footprint's vastly different. There's probably about 15 to 17 different areas that IT professionals use. In oil and gas, it really kind of just boils down to kind of the base ones, right? Because we don't have a lot of technical subsets like the IT industry has for software programmers and developers. So kind of the key ones right now that are used in recruitment are Facebook and Twitter, LinkedIn, of course, but now you see a rise in kind of kind of segmented and niche kind of job boards that have a networking segment in it. But really those 3, 4, LinkedIn is hugely important as kind of a networking site. They're kind of a blend between a couple of different models. But those are kind of the key ones that you see. Recruiters that are really kind of good at kind of targeting it and creating a profile really then go beyond that to different, not only boards, but really kind of forums, people where they're participating and posting studies. So that kind of segues into a different segmentation where you have professional association boards and things like that. So those are a little bit harder to kind of sniff out. But I would say the key ones are Twitter, LinkedIn, and Facebook. Any other questions? Yes?
The number that you cited, 26% rate of employment growth for petroleum engineers through 2022. I'm curious if you're surprised by that. I'm in university recruiting and have been through a lot of career fairs recently, and seeing petroleum engineers show up even for sales rep jobs at those career fairs. Just wanted to know if you had what was behind that number. Is that
Yeah, so that statistic comes from the US Bureau of Labor Statistics. So it wasn't from our study particularly. And that's absolutely true. Probably today, what you're seeing, because we've heard it too, recent petroleum engineer grads, you know, they're entering the workforce in probably the worst time for them, right? Like all of these things changing. You saw petroleum engineers in terms of hiring trends from the hiring manager side was, I think, the second from the bottom. So the demand for petroleum engineers today is not huge. I think what the Bureau of Labor Statistics is saying is that as an industry, however, our dependence on that particular technical subset is still really important. Now the challenge for us is how long does this take? Are we going to lose these petroleum engineers if they don't have opportunities, you know, in the next 2, 3 years? The answer is quite possibly yes. So I do think it's a little bit of a quandary, if you will, in where we sit. But you're right. And today the reality is it's low. The Bureau is basically saying on a projection that really extends out long term. Our industry is really dependent on that technical skill set. It just, you can't sidestep that skill set. So, I think this is one of the concerns in our industry is that we know that even though that we see every single day news releases about layoffs and slowdowns in certain verticals, we absolutely know that at some point in day, we don't know if it's tomorrow or next year or maybe 5 years from now, we know that reliance of folks is going to be hugely important, which is why I think the branding, if you will, of what we do as a business, that perception on the outside is so important. We need to make sure that we don't have the negative perception that continuously kind of takes people away from our industry where we lose them because of a short-term kind of impact on the type of jobs that we may not be looking for today or negative press of how it affects us. So I think you're right. I think your real-hand experience is true. But I think what the Bureau of Statistics is saying is that on the long term, that's kind of the projection that they would see. All the way in the back. Yep. It's hugely important that you point out kind of the parameters of who this segmented audience is. So you're probably correct in terms of the passive audience, that might be quite different. So this is more predominantly active candidates, right? As I mentioned, I think 54% were currently unemployed that were part of that survey. So it is a quite different slant when you look at people that don't have the position that are looking at it. I think you do have to be very careful when you segment it out with passive versus active candidates. It is probably a very difficult time for someone who is a passive candidate to realistically take an opportunity somewhere else. It's just too risky right now. Even if they really don't like their position today, And there are other motivating factors. They don't know what's going to happen, so which is probably why you're seeing that they're using it. I don't know if it's necessarily leverage, it's just the reality of where they sit today. And I think that's why we're constantly doing these studies. We do them quarterly because that landscape changes quite a bit. But I think that's a really astute observation. Anything else? Great. Well, I'll be around all day today, so if you do have questions, feel free to come grab me. You can email me as well, and I'll send you samples of those decks and other white papers that we've produced. We'll get moving to the next talk, and also just to keep in mind, at 12:45 is when we'll break for the networking lunch, the box lunches that we have.